Good evening, grade 12s. Yes. I want us today to talk about the interim dividend declared and paid. Remember, the interim dividend is the dividends that is being paid like during the course of the financial year or during the financial year, and then it is differentiated with the 1 year the dividends at the end of the year, of which that one is paid at the end of the year. So today I want us to talk about the interim dividend declared and paid. So they are saying that the Kima traders have an authorized share capital of 300,000 ordinary shares, of which 100,000 shares have been issued. So since they are saying that the company has got an authorized shares of how much? The 300,000 shares, while they're saying that the 100,000 shares have been issued at the price of 2 rand each. So now what I want us to discuss now is how are we going to calculate, or how are we going to record the dividends or the interim dividends adjustments, or the adjustment that is given here. So the transaction says that on the 31st of August 2014, the directors declared an interim dividend of 20 cents per share, and the checks in favor of the shareholders were posted on the same date. So, meaning that they have declared a dividend of 20% per share, and then this dividends thing, or this dividend, it's calculated using the number of shares issued. Dividend is calculated using the number of shares issued. So now we are saying that we are charging 20% per share, or per shares that have been issued. I don't know if you get what I'm saying, but the dividends, that 20 cent, it's calculated out of the 100,000 shares issued. So now they are saying that end of the financial year is on the 28th of February, meaning that this interim dividend was made during the year. So how do we calculate that one? So I think it's better if we just say, remember here, I've said that the 100,000, which is the number of shares, times 0.20 cents of the dividends. So that's why I'm saying that we calculate the dividends based on the number of shares issued. So this is what must happen. Under the cash payment journal, remember when we pay dividends, the money goes out of the bank account to the shareholders' bank accounts and whatsoever, or we can pay them by check as they said there. But where are we going to record them? Into the cash payment journal, since the money goes out of the bank or goes out of the business account. And then of course we are going to use a bank, and then the bank, the reason why we have bank is because the money goes out of the bank account, and then the money goes out of the bank account for dividends on ordinary shares. So the bank account and the dividends on ordinary shares are going to be affected as well. So I'm saying that under the CPJ we can say that what do we pay for, or what's the amount for, is our the amount is for dividends. The amount is for dividends. So you come back again, well, how much is the amount? Remember, it's 100,000 times 0.20 cents, of which is equals to 20,000. So now the amount you can just say 20,000, and then the details you can say dividends on ordinary shares. Dividends on ordinary shares. Simple as that. So now recorded the details. We said that we are recording this transaction for dividends, meaning that we paid money to, or for shareholders, or we paid money for dividends on shareholders and whatsoever. So now the amount is 20,000, and then dividends on ordinary shares. So now how do we record this transaction into the bank account? Remember, the money went out of the bank account for dividends on ordinary shares. So we can just say here under the details on bank, on the credit side, since the money went out of the bank account, you're saying that the dividends on ordinary shares with an amount. The amount is the same. The amount for dividends is the same, since the transaction is there. It's one, or since we have got only one transaction, We just record 20,000. Okay, we come back again. So now I want you to understand this part. Since we credited dividends on ordinary shares account and the bank account, we are going to debit the bank account under dividends on ordinary shares. Reason being that immediately when the money goes out of the business bank account going to the shareholders, the money in our bank account will decrease. So it has increased by 20,000 through the dividends on ordinary shares. And then under the dividends on ordinary shares, we are saying that the shareholders are going to be settled. So like that's why we are recording it on the debit side. And then you can just say, since the bank account has credited the dividends on ordinary shares, the dividends on ordinary shares is going to debit bank account. You can just say bank, you close brackets or interim, then you close the bracket, you open and you close whatever, with the same amount of how much? 20,000. So this is how we record such transactions. So like remember the dividends on ordinary shares, it's closed by the appropriation account. We can just say the appropriation account, due to the fact that like where we're gonna go and a lot of the things that we're gonna learn, we are going to learn that the dividends on ordinary share capital account or on ordinary shares account is going to be closed or balanced by the appropriation account. But here, since we don't have any transactions talking about the appropriation account, is not necessary. So this is how we record the transactions under the dividends and whatsoever. So a quick review. We calculate dividends based on the number of shares issued, and then since they since they said that they declared an interim dividend of 20 cents per share, we are going to say the number of shares issued, of which is 100,000, times 0.20 cents or times 20 cents, you can say. And then at the end of the day, you record the transaction into the cash payment journal because the amount goes out of the business account to the shareholders. And then under details, you can just say dividends, or you can just say dividends on ordinary shares. Then you put the amount that you get after multiplying 100,000 with the 20 cents. Then under bank account, we are recording the money on the credit side because the money goes out of the bank account to the shareholders. So we are crediting the dividends on ordinary shares, while under the dividends on ordinary shares, we are debiting the bank, of which we can just say interim dividends. So this is how we record the transactions under the interim dividends. Please follow us for more. Please don't forget to subscribe. Don't forget to like. Don't forget to click the notification bell so that you see, or so that you are notified with our upcoming videos. And please share with friends. Thank you, great travels. Have a good day.